Hello, my name's Todd Lees, MD of Lotema Brokerage, and welcome to our cereals and pulses market update. Well, I've only just returned to Australia from a recent crop tour in the UK and the Baltic regions, and the hot topic on everybody's lips, not only in Australia but internationally, is the ongoing dry conditions and the concern for crops, especially the cereal, pulses and oilseed crops. While in many cropping areas of Australia they received good rain in April, which gave farmers the confidence to plant, but unfortunately we've received very little rain since then. This is putting extreme pressure on any of those crops that have already germinated, but also pressure on those crops that are yet to germinate and waiting for that 1 to 2 inches to get a good start to the season. And unfortunately, while our Bureau of Meteorology has lowered the possibility of an El Nino event, several models are predicting that rainfall over the next 3 to 4 months is likely to be less than our normal average for that time of the year. Understandably, crop production estimates are falling. Wheat started at 26, it's now probably 23 to 24 million tonnes. If we don't get rainfall in the next month, it's likely that that production estimate will definitely push towards the 20 million tonne mark. Desi chickpea estimates are also falling. We probably started out at about 2 million tonnes. Now we're probably at a 1.5 million tonne estimate. Canola also is currently standing at 3.3 million tonnes, but this estimate is also likely to drop significantly if we don't get rain in the next 2 to 3 weeks. What does that mean for prices? Well, the farmer is now moving into a drought risk protection mindset. So what does that mean? It just means that whatever physical stocks he may currently have on farm, he's going to hold on to. As the longer this dry spell continues, he's going to hold on to that stock in the thought that prices are going to firm, but also he may need to hold on to that physical grain for his own livestock feeding, which may be required come our summer period. So too, any interest to sell forward very diminished, given one, the farmer doesn't know whether he's going to have a crop to sell, and also secondary, he feels that the longer this dry spell continues, the greater the chance that prices are likely to rise. Pulse prices in the UK and the Baltic regions are also firming on the back of a increasing or a rising Métis futures, which is also rallying on the back of poor wheat production prospects in the Northern Hemisphere. Nominally today APW is offered at around $235 on the West Coast and about $220 on the East Coast. That $15 spread, of course, is reflective of the drought risk premium put in for Western Australia. Desi chickpeas are nominally around $850 for July shipment, and green mung beans, manufacturing quality, at about $990 CFR to the subcontinent. New crop offers are extremely difficult to come by, given farmers are very reluctant to commit to supplying a tonnage that they're not sure they're going to have at the end of the year. Well, that's it for now. I look forward to catching up with you again next week, and have a great weekend. Bye for now.